So today we are going to study about adjustment entries. So initially, I will take 4 adjustment entries which are very important, which comes in exams, and after that we will do some more, okay, adjustment entries. Let us see the first adjustment entry, that is closing stock. Closing stock. So the first is closing stock. Now, if you get closing stock as adjustment entry, see which are the 2 places where you will write closing stock. So the first place is in trading account. On the credit side of the trading account, I will write closing stock. So on the credit side of the trading account, I will write closing stock. Then in balance sheet, I will write on the, so this is the asset side, this is the liability side. Liability side. So on the asset side, I will write closing stock. Is it clear? So the 2 places where the closing stock comes is one on the credit side of the trading account. Remember, on the credit side of the trading account, and second on the asset side of the balance sheet. So is it clear? So the 2 places where closing stock comes, if there is a in adjustment, see every question in adjustment there will be closing stock, and closing stock comes in 2 places. One on the credit side of the trading account, and second on the asset side of the balance sheet. On the asset side of the balance sheet. So these are the 2 places where closing stock comes. Is it clear? So this you have to remember always. Second adjustment entry is outstanding expense. Suppose in the adjustment it is rent outstanding rupees 500. So there is a rent outstanding of rupees. Okay, this is an adjustment. It's an adjustment. One of the adjustment is outstanding. Suppose in the question, okay, there is a question that there is a outstanding rent of rupees 500. So how you will write? Now suppose in the trial balance, okay, it is, suppose it is given, the question is there is a rent of rupees 2000 rupees. Is it clear? So there is a rent of 2000 rupees in the trial balance, and in the adjustment there is a outstanding rent of rupees 500. So how you will write this adjustment entry in our final accounts? Okay, now rent is a indirect expense. So it comes in profit and loss account. So on the debit side of so there is a rent of 2000. So rent of rupees 2000. So there is a rent of rupees 2000. But adjustment entry says there is an outstanding rent of rupees 500. That means rupees 500 rupees of rent is not paid. Outstanding means you have not paid. So there is an outstanding rent of rupees 500. Already in trial balance there is a 2000 rupees as rent. So that means now your new rent will become rent 2000. You will add outstanding rent. So you will write add outstanding rent. And how much is the outstanding rent? 500 rupees. So the total rent will become 2500. See, 2000 you have paid, but you have not paid 500 rupees. It is outstanding. So in profit and loss account, you will add outstanding rent with the rent. So along with the rent, you have to add outstanding rent. Okay, I will write slightly bigger. So there is a rent. There is a rent of rupees 2000, and you have to write add outstanding 500 rupees. So your total rent will become 2500. So total rent will become 2500. Now this amount we have not paid. So it is a liability. So where it will come? In balance sheet. In balance sheet, on the liability side, we will write outstanding rent. And just write a O/S outstanding rent of rupees 500. Clear? See, whenever you get outstanding, it can be outstanding wage, outstanding insurance, outstanding rent, outstanding salary. So what you have to do is, whenever you get outstanding, you have to add that outstanding amount with the expense that is given in the trial balance. Okay, like there is already an expense of rupees 2000 we have paid, but there is an outstanding rent of rupees 500. So what you have to do, you have to add outstanding amount with the expense. So expense was 2000, you have to add outstanding amount. So your total will become rent plus outstanding. And since we have not paid this amount, so this will come on the liability side of the balance sheet. It will come on the liability side of the balance sheet. So this is how outstanding is done. So once again, I am repeating. See, as far as closing stock is concerned, it comes in two places. One on the credit side of the trading account, and second on the asset side of the balance sheet. That is about closing stock. Then regarding outstanding, see, whenever you get outstanding question in adjustment, you have to add that outstanding amount with that particular expense, okay, in the profit and loss account, and then you have to write that outstanding amount on the liability side of the balance sheet. Okay, so two places where it will come. The two places where outstanding amount will come is, one, you are going to add that outstanding amount with the expense, and then you have to write that outstanding on the liability side of the balance sheet. Okay, so this is how the outstanding amount is adjusted in the final accounts. Okay, one, you have to add with that particular expense. So if there is an outstanding rent, add 500 with the expense, that is rent. So this will become 2000 plus 500, 2500, and it will come on the liability side of the balance sheet. Okay, because this 500 amount is not till now we have not paid. It is outstanding, so it's a liability. So it will come on the liability side of the balance sheet. So that is the second important thing. Then the third thing is prepaid. Third adjustment is prepaid. Prepaid. See, as I told you, what is prepaid? Prepaid means something you have paid in advance. Okay. Suppose next year's rent also we have paid. Okay. Or we have paid salary of the next year, or insurance of the next year also. So that amount should not come in our this year final accounts, because that is next year's expense. For example, okay, suppose there is an adjustment entry. Okay, there is a salary. Okay, salary is, or you can say there is a prepaid salary. Prepaid salary of rupees 1,000. Okay, there is a prepaid salary of 1,000. Suppose in trial balance there is a salary 10,000 rupees. So already in the salary, okay, we have written there is a salary of rupees 10,000. But in adjustment, the question is there is a prepaid salary of rupees 1,000. That means 1,000 rupees we have paid in advance. And that 1,000 should not come in this year because that is next year's expense. So how you are going to write prepaid? See, whenever you get prepaid, for example, now at present your salary is how much? 10,000. So salary is 10,000 rupees. Now in 10,000 include this 1,000 also, which is next year's expense. So what we will do? We will deduct that 1,000 from the salary. So we will say less prepaid 1,000. So your expense will become 9,000. So whenever you get prepaid, you have to subtract from the expense. See, outstanding, we have to add with the expense. Prepaid, we have to subtract from the expense. Okay, outstanding is a liability. But as I told you in my last class, prepaid expense are assets. Remember, prepaid expense are assets. So first you will deduct 1,000 from the salary, that is 9,000, and on the asset side of the balance sheet I will write prepaid salary 1,000. So I will write prepaid salary of rupees 1,000. So this is how we write this adjustment entry in our final accounts. Okay, so what you have to do? First you have to subtract prepaid amount from the concerned expense. So in this case expense was salary. So there is a 1,000 rupees prepaid. So first deduct 1,000 rupees from the salary. Okay, so your salary will become 10,000 minus 1,000, that is 9,000. But this 1,000 is a prepaid. Okay, so that money is lying with us. So it is like an asset. So it will come on the asset side of the balance sheet. Okay, so remember, all outstanding expense are liability. All prepaid expense are assets. Outstanding, we have to add with the concerned expense in the profit and loss account, and prepaid, we have to subtract from the concerned expense in the profit and loss. So that is the third entry. Now the fourth entry, okay, let us see the fourth entry, and that is fourth adjustment, which is another very important, and that is, okay, there is a 10%, okay, in charge 10% as depreciation. Charge 10% as depreciation on machinery. Okay, see, we have to charge 10% of machinery as depreciation. That means the 10% value is going to be reduced from the depreciation. So depreciation means decrease in the value of the asset. Okay, suppose in the trial balance there is a machinery. There is an asset called machinery, and the value of the machinery is 60,000. The value of the machinery is 60,000. Now you have to charge 10% as depreciation on machinery. So that means 10% value is going to be deducted from the as depreciation from the machinery. Now what is the 10% of 60,000? So 10% of 60,000 is 60,000 divided into 10 by 100. So 10, it will go. So the amount is 6,000 rupees. So your depreciation amount is 6,000. Now depreciation is a loss. Remember, depreciation is a loss. So it will come on the, see, all loss are expense. So it will come on the debit side of the profit and loss account. So I can write depreciation on machinery. Depreciation on machinery, rupees 6,000. So depreciation on machinery is 6,000. And in the balance sheet, see, machinery is an asset. So it is shown on the machine. Suppose there is a machinery of 60,000. Okay. Now there is a depreciation of 6,000. So what you are going to do? You have to subtract 6,000 from the machinery account. So we'll say less depreciation. Less depreciation 6,000. Okay. And your amount will become 54,000. So that means 6,000 should be deducted from the asset. Okay. Or that in this case the asset is machinery. So your value will become 60,000 minus depreciation. That is 6,000. So your machinery, the value of the machinery will become now 54,000. Okay. So let us do this 4 adjustment entries. Okay. So once again, those who have joined late, I'm going to repeat this once again. Okay. Then we will try to solve some problems. So in the question, you will be given a trial balance. Okay. Suppose there is a trial balance. I'm just preparing a rough trial balance. Trial balance. So it has got debit side and credit side. Rupees. Okay. Suppose there is a building of 1 lakh rupees. Okay. There is insurance, that's an expense insurance of rupees 20,000, or let it be 10,000 rupees. Okay. There is a salary of 25,000 rupees. So salary of 25,000 rupees. Okay. And okay. Now see, you will be given a trial balance plus you will be given some adjustments. So what are the adjustments? In the question, the adjustments are, okay. So in the trial, I write here adjustments. What are the adjustments? The first adjustment is there is a closing stock. There is a closing stock of rupees 20,000. There is a closing stock of rupees 20,000. Okay. Then second, charge 10% of building. Charge 10% of building as depreciation. So you have to charge 10% of building as depreciation. Third, there is an outstanding salary of rupees 1,000 rupees. Rupees 1,000. So there is an outstanding salary of rupees 1,000. Outstanding salary of rupees 1,000. And fourth, okay, there is a prepaid insurance of rupees 2,000. So prepaid insurance of rupees 2,000. Okay. So this is how the question will come. They will give you trial balance. Okay. There will be a lot of entries in trial balance. At present, I have taken only few, and there will be adjustment entry. Now, how to solve this particular problem? Okay. I am taking only few entries. Okay. So you have to prepare trading account. So first is you have to prepare trading account. So first is trading account. Second is profit and loss account. Profit and loss account. And the last is balance sheet. Balance sheet. Okay, at present other entries are not given. Suppose you are given, okay, there may be a lot of entries, but I have taken only 3 entries: building, insurance, salary, and these are the 4 adjustment. Okay, so how to do that? So let us take the first adjustment, that is closing stock. So see, the 2 places where closing stock comes is one on the credit side of the trading account. So by closing stock, the amount is 20,000, and it will come on the asset side of the balance sheet. I will say closing stock 20,000. Closing stock of rupees 20,000. So the two places where the closing stock comes is one on the credit side of the trading account and second on the asset side of the balance sheet. Now the second is charge 10% of building as depreciation. Now what is the cost of building? Building is 1 lakh. You have to charge 10% as depreciation. So what is 10% of 1 lakh? The 10% of 1 lakh is 10,000 rupees. Is 10,000 rupees. Now depreciation is a loss. So on the debit side of the profit and loss account, I will write depreciation on building. Depreciation on building. And how much? 10,000. So I'll write 10,000 here. Okay. Now, see, that means the value of the building is decreased by 10,000. So in the balance sheet, what you will do, you will write, see, building is an asset. So it will come on the asset side of the balance sheet. So you will write 1 lakh rupees, 1 lakh rupees less depreciation 10,000. So that means your value of the building is now 90,000. So how you are going to write depreciation? So if the question is charge 10% as depreciation, calculate 10% of 1 lakh, which is 10,000. Depreciation is a loss. So it will come on the debit side of the profit and loss account. So write on the debit side of the profit and loss account 10,000. And that 10,000 should be deducted from the concerned asset. So initially the value of the building was 1 lakh. So less depreciation. So you have to subtract depreciation from the asset. So the new value of depreciation will become 90,000. Okay. So that is how it is solved. Now the third thing is outstanding salary of rupees 1,000. Okay. So your salary is 25,000. So that means 1,000 more you have to pay. You have not paid 1,000 rupees. So what you will do? In profit and loss account, I will write salary 25,000. So this is a salary of rupees 25,000. So salary 25,000. So your salary is 25,000. Now there is an outstanding. Outstanding means you have not paid. So what you have to do? You have to add outstanding. Remember, all outstanding expense must be added. So add outstanding. Add outstanding 1,000. So your salary will become now 26,000. So your actual salary that you have to pay is 26,000. Out of which 1,000 you have not paid. It is a liability. So it will come on the liability side of the balance sheet. Outstanding salary 1,000 rupees. So outstanding is a liability. So what you have to do? Add outstanding expense with the concerned expense. In this case, the expense is salary. So add 1,000 outstanding amount, okay, 1,000 rupees to the salary. So it will become 26,000. So that is your actual expense. But 1,000 we have not paid. So it will come on the liability side of the asset, that is outstanding salary. So it will come as outstanding salary. So that is the next one. And the last is prepaid insurance of rupees 2,000. It is prepaid. You are paid in advance. Okay. So how much is the insurance? 2,000. So insurance, you'll write insurance 2,000. See, it is a prepaid. So I will subtract prepaid amount. See, all outstanding should be added and all prepaid should be subtracted. So 2,000 rupees has to be subtracted from, see, insurance was how much? 10,000, sorry. Insurance is 10,000, out of which 2,000 rupees you are paid in advance. So deduct that. So 8,000 rupees. Okay. And this 2,000, since that money is lying with you, so what you have to do? You have to put that in the asset side of the balance sheet. See, always remember, all prepaid expense should be subtracted and it comes in the asset side of the balance sheet. So you will write here prepaid insurance, and that is 2,000 rupees. So this is how we will do 4 adjustments. So we have learned how to do closing stock, how to charge depreciation, how to do outstanding, and how to do the adjustment of prepaid. Okay. So remember, outstanding expense has to be added with the concerned expense and it comes in the liability side of the balance sheet. All prepaid expense should be subtracted from the concerned expense and it comes as the asset side of the balance sheet. Depreciation, it comes on the debit side of the profit and loss account and it should be subtracted from the concerned asset in the balance sheet. Closing stock will come in 2 places, one on the credit side of the trading account and second on the asset side of the balance sheet. Okay, so let us solve all this using, let us see a problem, okay, and we will try to solve. Okay, so once again, madam is joining.